Omicron Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
G'day and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us here at ausbiz. So there was little data for markets to trade on overnight. MSCI's gauge of global stocks drifted lower. It was a choppy session on Wall Street with the major indices ending negatively as tech shares fell despite surging to begin the session. Nvidia and Tesla led the losses. Supermicro computer shares plummeted after it reported quarterly adjusted gross margins below estimates, and rival Dell Technologies also fell. Airbnb shares fell heavily, having reported in the previous session, and shares in ride-sharing company Lyft reversed sharply after a soft forecast for the key summer quarter prompted concerns that it may be losing business to rival Uber. Shopify beat analyst estimates for second quarter results and forecast upbeat sales growth for its AI-enabled tools, which attracted more merchants to its e-commerce services. Shares of Walt Disney fell as it forecast a moderation in demand at its theme park business in the coming quarters. Operating income nearly tripled at its entertainment unit, with the combined streaming businesses of Disney, Hulu and ESPN posting a profit for the first time. And Warner Brothers Discovery has written down the value of its TV assets due to uncertainty of fees from cable and satellite distributors and sports rights renewals, which sent its shares down nearly 7% in extended trade. The media conglomerate reporting revenue of $9.7 billion in the second quarter, below analyst estimates of $10 billion. And in Europe, the banks rose strongly, helping the stock 600 index log its biggest one-day gain since November. However, Novo Nordisk saw its steepest one-day fall in 2 years, down 6.7% following a disappointing profit outlook and weaker than expected sales of weight loss drug Wegovy. Well, a bond auction has pushed US Treasury yields higher and the US dollar rose against the yen after cautious central banker comments. The Bank of Japan Deputy Governor saying that the bank would not raise rates when financial markets are unstable. Its rate hike last week sparked the rout in global equity markets as investors unwound their yen carry trade positions following a surge in the low-yielding currency. Well, the US Treasury Department saw soft demand for a $42 billion sale of 10-year notes as companies rushed to sell debt, with risk appetite improving. The yield on the 10-year note was up 7 basis points to 3.95%, and the 2-year little changed at 3.98. And in currencies, the yen dropped after the BOJ's comments. And against the Japanese yen, the US dollar strengthened almost 2%. The Aussie is trading at 65.2 US cents. Well, for more on what is driving markets at the moment, I caught up with Ira Epstein from Lynn and Associates.
I read a story in Reuters today, late in the afternoon, maybe an hour and a half ago, and it had to do with the fact that Egypt has been told by Tehran not to send airplanes over a certain 3-hour period into their airspace. In other words, all civilian planes, by the way, from Egypt, to stay out of Tehran airspace. So that is a warning that something's probably brewing. They'll say it's a military exercise. Who knows? I think you have to pay attention to the fact that if Israel gets attacked, how does it get attacked? Is it surgical or is it frontal? Frontal being they're hit from all sides at once and it lasts. My guess is that there's so much pressure on Iran to allow them to attack. Israel expects to take one on the chin, but make it probably against the military and not civilians. We'll see. But will the markets overreact if it takes place? It has a history of doing that, so don't get caught in that trap.
All right. What would you be looking at in particular? Obviously, oil would be in focus.
Oil, the gold market, the Swiss franc, the Japanese yen, the typical candidates, probably even get a bid in the bonds and the note markets in the U.S. But again, it can be very fleeting. If it's not fleeting and it looks like it is a frontal attack where it's all sides and lasting, all bets are off. Anything can happen because at that point, Israel's allies have to come to its defense, the U.S. and some of the other ships that are in the region, and they have lots of firing power. No one wants to see that. So I think it'll be surgical when it happens. But when I read this, I have to admit, I got concerned.
Well, of course, this comes off the back of that market turmoil we've seen this past week, Ira. So that would be just adding to those concerns, given we've obviously had worries about forthcoming recession in the US, perhaps weaker earnings results, the geopolitical concerns, and of course, the real trigger being the unwinding of that carry trade with the yen.
Absolutely. The carry trade's big time. Remember, what you do as a carry trade artist is you borrow in the weakest currency, and you take that money and you invest in the strongest area that you can get a risk-on return, figuring that the difference of interest there is near zero in Japan, and in the US it was a number that was much higher. Now what's been happening is the spread's unwinding as US interest rates have come down hard, in some cases almost a full 100 basis points already, and the yen has gone up that 25 basis points. And in addition, the environment for the risk-on trade melted away. So you've got some people that are caught in long-term unwinding, and that is one of the reasons that on rallies in the US stock market in the near term, you get this continued selling pressure. And people don't understand that. And gold was another area they went into. So the gold market gets the selling pressure. Oil is not one of the markets that you typically put on a risk-on trade. You go to the other market stocks and the gold market traditionally.
Ira, we have heard from the Bank of Japan Deputy Governor signalling a dovish approach at the moment, that he doesn't want to lift rates. Well, they don't want to lift rates in the midst of this turmoil.
Well, he will lift rates when the turmoil simmers down. So what happened is the Nikkei fell, I think it was Monday, 12.5%, came back 10.25% yesterday. It's down a bit today. So basically what's going on is he wants to avoid that. And they know the carry trade is there, and unwinding it takes a long time. So they don't want to hurt themselves. They don't want to hurt the world, which is smart. They don't, and very important, 12% down is a shocker. You haven't seen that in Japan. I think 1987 was the last time. So the bank properly stepped up and said, okay, let's smooth this out. This is how we're going to do things. We'll still reach our goals, but we're only going to do it in quiet times.
Ira, what are you viewing stock-wise at the moment, particularly given the latest earnings results we've had? And there is, of course, broader concerns about the AI thematic and whether those returns are actually going to be immediate or pushed much further out. And of course, we have seen tech come off again in that past session. I was just looking at Supermicro Computer. Those shares plummeted on its adjusted gross margins, which came in below estimates. Dell also falling. What are you seeing there at the moment?
I covered Dell tonight, actually, in my videos. People can Google me and they'll find it out there. To make a long story short, Dell, while I see other networks saying this is the darling of the computers, it's no darling. It was a $180 share stock that's back under 90. So there's nothing darling about it. And I realized they work with Nvidia and all that. And as I expected, once we saw a correction in tech stocks, you would get the naysayers coming out and saying, was that it? We've seen the highs and that's the end of it. I don't know that you've seen the highs. The first thing that would have to happen is the CapEx spending, and there's a lot of it going to go on by the Amazons, by Microsoft doing their own, by Google. I can go on and on. You have to do that in order to be in the game. If you don't do it, you're going to be left out of the game. And once you're left out of the game, you're an Intel. That we're watching their shares down to, 25% yesterday, to give you an idea. You don't want to do that. At the same time, it's like everything brand new. It'll wobble, but it's going higher. So what's wrong with Nvidia, and this is wrong with any commodity, is it's a commodity. Do you understand that? Think of TVs when flat screens came out, folks. We would spend thousands. Now I go into a Costco or Walmart, and I can buy a great set, and I just did. $400 for a guest room, and what is it, 65-inch set. So it gives you an idea as to everything's a commodity, including a chip. But you're not at that commoditization period yet, not yet. Nvidia has a big lead. They will be okay. Whether they've seen the high for the year, I can't answer that. But your question was, what do? You pull out a shopping list, and if the market keeps coming down, you put a number in that you think, hey, if they're there, the PE on this stock is 16, 18, whatever it is for a good company, 20, and you start buying 10%. And you buy a little here, you buy a little there, and you spread your money around. You let this go by you. These are still great companies. They're still doing a heck of a lot of business. There's a lot of misses going on today. We see that. I saw it in the aftermarket. And there's a lot of hits going on. So there are good things still happening. However, in the tech, those 7 are due to pull back, and they are in the midst of a pullback. It does not mean the game is over.
And what are you making of those consumer-facing stocks at the moment? We've heard from Airbnb, those shares tumbling on concerns about what's ahead for the company. Same with Lyft. We also heard from Disney as well, with seeing a moderation in demand, particularly in terms of its theme parks.
I couldn't think of a worse time for Disney to raise prices with the bundle. I mean, I don't know their marketing strategy. I'm assuming the strategy is this. I have young children. If I turn off the Disney in the house, they're going to scream and wail, and I can't stand it, so I'll pay the money instead of a babysitter. Barring that, this is the wrong time to be raising prices. As for Airbnb, I view it as a very simple thing. If you look at air travel, other than the holidays, it's coming down. The airlines are losing money, they claim right now. They still have plenty of capacity, and people are pinching pennies. So if you're pinching a penny, then you're not getting it. It is surprising, though, in the month of August, when vacation time for us that are in this hemisphere where this is our summer, for there not to be the bookings. And that is scary because it really means the consumer is pulling back much quicker and much sharper. I mean, we love to go to New York, but I can't afford the prices of some of these rooms. I mean, a nice room is insane. Airbnb is the way to go.
Ira Epstein, I should say, from Lynn and Associates. All right, let's check the local market. We are expecting a negative start, as you can see, SPI futures off around 0.4%. So stay with us because the open is just a couple of minutes away.